We have been talking about affordability, and we've talked about how interest rates really have an impact on monthly payment, how 1% makes a big impact. But there are other things that affect your monthly payment and affordability as well. Today on Recharging with Champions, I am going to jump into 3 things that a buyer can also want to look at when it comes to affordability and how one house, even though the interest rate is the same, can cost more than another. We're going to start with Homeowners Association. A homeowners association fee is sometimes a small yearly amount, but sometimes it can be a pretty hefty monthly payment that your buyer wants to make sure is included in their monthly payments. When you're buying a PUD, planned unit development, or a condo, those monthly payments can actually be like another car payment. I've seen them as high as $700, $800, even $1,000 a month for some nice high-end condos. So even though you might be looking at 2 homes that are the same price range, that have the same interest rate, if one of them has an expensive homeowners association, that is going to put your monthly payment higher and affect affordability. Number 2 we want to talk about is insurance. Homeowners insurance varies greatly, and it has lots of different factors. So even though you are looking at 2 houses that are the same price range, same interest rate, and they both have the same homeowners association, if one of them has a newer roof, one of them is in an area that's further away from a fire department, there are lots of things that go into what the pricing will be on homeowners insurance. So again, when you're looking at houses and looking at affordability, you want to make sure that you are also pricing your homeowners insurance. The third thing we want to look at is taxes. Good old Uncle Sam. Yes, 100% where the home is located, what tax district it is in, is going to affect affordability. For example, if you want to live inside of a city, a lot of times you have county, city, and sometimes some school taxes that you wouldn't have if you just went outside of those county lines. So it's very important when you're shopping apples to apples that when you find a house, same price, same interest rate, same homeowners association, same age roof, but one of them is in the city and one of them is in the county, you're going to be paying a little bit more for that house that's in the city. So make sure that your buyer is aware of these differences. And when they're looking at houses, if they suddenly make a switch from county to city, have them go get that monthly payment estimated so that they know what they're getting into when they go into that new tax range. These are 3 things that do affect affordability that your buyers need to be aware of when they're looking at houses. So maybe they find one that's a little bit more expensive than this one over here, but the insurance is going to be cheaper. There's less homeowners association and it's out in the county where you've got cheaper taxes. Well, it might be that the monthly payment is actually cheaper in the more expensive house. Really important things to notice when you're out there shopping for a home. Go make sure your buyers are aware. Make sure when you're showing properties that they know. And by the way, I have the script already created for you. So if you want to take a script and share this information on a video for your social media, jump into Recharging with Champions. Remember, if you jump in the first couple months, it is 100% free for my beta members. All you have to do is use code word LEGACY when you check out. You won't even need to put a credit card in, and it'll be free for life. So jump in before it's too late, before there's a charge, and get in and registered for rechargingwithchampions.com. We'll see you tomorrow.